Who would have thought? Who would have thought markets would have actually sold off into the close? What's going on, guys? It's Ricky with TechBud Solutions here with a super quick market update. And what we talked about today, I don't think we could have prepared for this better. In today's earlier video, we talked about, hey, markets are holding up pretty well, but I'm not afraid to short if economic data, if price action supports it, right? There was no reason to enter an aggressive short if markets as a whole, QQQ, NASDAQ, or SPY, keep pushing up higher, right? Because when overall indices continue to thrive and go higher, it provides the environment for these like irrational stocks to continue to, push even higher, just like we saw yesterday, right? We saw it with Open, we saw it with PLTR, we saw it with Oklo, we saw it with Irene, whatever it is that stock is called. But then that sentiment shifted, right? It broke that support. We began to actively sell off, and then we didn't break below $600 per share, which again is one thing that I definitely wanted to make sure we pointed out. This is just a pullback. It's a pullback within the day. Just as much as it sold off today, it can 100% recover by tomorrow. That's all it is, right? It's testing that $600 support range that it's been testing since Friday of last week, and we have not been able to break it. I like to keep my trading super simple, get in, get out, make that money, and bounce. I don't like to carry these trades overnight. I have my alert set for the break below 600. If we do see that break of support, then maybe at that point, I can entertain a more aggressive short position. But as of right now, it looks like markets pulled on back. It's still building an ascending resistance and ascending support. There's no reason to get ahead of myself. Again, I like to take things day by day and even intraday. One moment I might be bearish if market direction supports it, but another moment if it looks oversold enough, I could support going long because we all know markets love to recover in an irrational market. Now, I quickly wanted to share some of the news that I came across today. I thought some of you guys would find this to be quite interesting. Just in, NVIDIA to take a $2 billion equity stake in Elon Musk's xAI, as Bloomberg reports. So what exactly does this entail? So Elon supposedly is reporting nearing a $20 billion capital raise tied to NVIDIA chips. NVIDIA itself is among the investors in the xAI chip deal. Another multi-billion-dollar AI deal has arrived. So let me get this straight. AI companies are investing into other AI companies so then they can invest back into them. Okay, got it. With that being said, this was a take that I found to be quite interesting. And although I might not agree with it, that's just my opinion. I like to share both sides, right? I have my opinion, my bias. I think that we're in this insane overvaluation for almost everything. Like NVIDIA's not, I'm investing in NVIDIA at a really cheap price. So do I think NVIDIA is overvalued? Yes, at this current price level. Do I think that NVIDIA as a whole is not worth anything? No, of course not. I think it's the world leader in what it is that it does. With that being said, it's just also respecting. I'm invested in NVIDIA at a very cheap price. I would never double or triple my position at this elevated level just because it's not worth the risk, right? That being said, I found this to be a pretty interesting take. I think that we are watching the new financing model for GPU build-outs emerge. The funding is tied straight to the hardware, so if a project fails, the lender can seize the GPUs because they hold the value on their own. NVIDIA chips are effectively turning into their own asset class. Wild. I thought that was quite interesting. I felt like some of you guys might believe that or might agree with that. I don't. I find that the more leverage and the more creative these companies get in being able to facilitate these partnerships to pump, because we all know that that's all that it does, right? Is when announcements like this happen, it just pumps valuations to new highs. But then again, these valuations are coming out of nowhere. It's not like, again, NVIDIA has very impressive results quarter after quarter, really impressive growth quarter after quarter. Not to this extent. At some point you just have to understand that, wow, these valuations, the price that these companies are valued at versus what these companies are producing, there's a big disconnect. That's where PE ratios, right, come in. PE ratios to a certain extent do matter, right? And especially when you're trying to invest in a fundamentally good company, there does come a point that you just have to acknowledge, okay, wow, this might be getting ahead of itself. But it is a very creative idea. And I think I just wanted to share it with you guys because it would be very interesting to follow up 6 months or a year from now and to see, hey, maybe this is a model that all these companies began to follow, and maybe it's something that leads to even higher valuations, or maybe it all comes crumbling down, right? Because they were so overvalued, so over-leveraged, so much irrational valuation that when things begin to fall apart and maybe growth isn't as great or net margins aren't as great as what was expected, then corrections happen. Because that's what tends to happen, right? We see these pumps, we see these high expectations, but then when the reality doesn't actually meet up with the expectation, then there's these corrections. Just something, right, to talk about. This shouldn't discourage you from investing in the companies that you find valuable. At the end of the day, we're all here for the same reason, to make money and invest or trade the companies that either we see opportunity in or we see value in. That's all we're here to encourage you to do, is just make sure you understand your actual intention. Understand the difference between a trade, getting in, getting out quickly, making that money and bouncing because it's most likely a high risk opportunity, or an investment, still inherently some form of risk behind it, but normally has more of a fundamental understanding of, hey, you're investing in a good business with good growth potential, and most likely your intentions are long-term. Now, the other thing that I found to be quite interesting is that Irene was down as much as 7.5% after market hours after an announcement of an $875 million convertible note offering, potentially up to $1 billion. Reminds me of when Nebius issued debt to fund its CapEx intensive build out from Microsoft. This time, Irene is looking to deploy 2.91 GWs of total capacity. That's expensive. So in my opinion, is when these companies can't make enough money and they have insane valuations, it's smart of them to offer these convertible notes. Now, does that mean that's great for investors? Well, in a very simple answer, no. Obviously, you would hope that they're using this money to better position the company, so it's smart on their part. But it could also dilute investors that are currently invested, as it makes it less valuable to that same extent. So it's all up to you, right? On whatever it is that you see to be fit. I see Nebius as an absolute BS company. If you actually look into their financials, I mean, it's laughable. If I'm not mistaken, and I have the right company in mind, let me go ahead and pull it up. NBIS. Here we go. So it's a company that has 34% downside based off of a series of different analysts. And it's a company that has a PE ratio of 155 times its earnings, meaning that from what the company is currently producing to what the company is currently valued at, it's valued at 155 times its actual revenue or net income. Its net income is $243 million. Yet this is a company that trades at a whopping, market cap $29.5 billion, which again makes sense on why it's sold off so much. So we see this significant sell-off today with Nebius. Doesn't really come as a surprise. It's had an amazing pump for the past few days. So a nice correction makes complete sense, right? What goes up must come down. That's, in my opinion, just all it is. It's just an absolute pumping up, just like we saw with Irene. Irene is doing a very good job pumping. Do not be surprised in the days that follow if we see a correction back down to $50 per share, or right around where that moving average is. That's where it tends to find a support. And you would have to hope that the hype or the rally continues, because if it breaks the support, there is huge downside potential for Irene, as again, this is a company that's also full of BS, just like TEM and just like we saw with MSTR, right? MSTR is one of my favorite and original piece of crap companies. Again, Bitcoin just hit new all-time highs, but MSTR is still down 40% from its previous all-time highs that it made back at the end of 2024. How does that happen? I thought the MSTR was the ultimate money glitch. I thought MSTR was the Bitcoin treasury. Again, keep it simple. MSTR is a Ponzi loop. It dilutes investors by doing share offerings, so it borrows against investors at 0% interest. I'm here to remind you every single week. Even for those that already know, I know that even if there's one of you out there that was not aware what MSTR is, MSTR literally just does more share offerings. They dilute current investors, which is the same reason on why Bitcoin has been increasing in value, but MSTR has not, because they just continue to do more share offerings, creating shares out of thin air, borrowing against those shares at 0% interest. So they don't pay anything of the money that they borrow, and then they use that money supposedly to buy Bitcoin. So again, very simple. If you're bullish on Bitcoin, buy Bitcoin itself. Why would you ever buy a software company that loses hundreds of millions of dollars every single year, that dilutes you, to borrow against you, to buy Bitcoin? It's like, you can't just be stupid. You're like super stupid if you invest into MSTR. To me, it's that straightforward. When you look at the business model, there is no business. That's why they invest into Bitcoin. So it's extremely laughable. I truly do believe that Michael Saylor, once it happens, as we all know that Bitcoin always crashes, eventually it's going to crash 50% as it always does. I really do think that Michael Saylor will be one of the sole reasons on why we see one of the most significant Bitcoin drops that we've ever seen before, and it's because of the amount of pressure he's going to be put under. I think he can be the new Sam Bankman-Fried. I'm very excited to follow up and to see, does it end up playing out in his favor, or does it all come crumbling down, right? Very excited to follow up. Nonetheless, again, we'll talk a little bit more about this during our live trading session tomorrow with the LPP team. And gold hit new all-time highs for those that did not see that. We just hit $4,000 for gold. So again, if you guys have any questions, feel free to comment down below. Just remember, again, a lot of volatility right now. The government is still shut down. One moment we're selling off, another moment we're rallying. So just be mindful of your position size, and please be intentional with the trades that you take. This is not a time where you want to overtrade. This is a time where you want to be calculated. If the trade is not meeting your criteria or the investment's not meeting your criteria, now is probably not a time to just risk it for the biscuit. It's be calculated, be intentional, and if anything, when in doubt, don't be afraid to just stay out, right? No reason to overtrade in this market. So very excited to follow up. I'll see you tomorrow for our live trading. If you want to tune on in, second link down below. Like always, let's make sure that we end the year on a green note. Take care, team.